Claiming your Social Security early to invest is both a golden opportunity and a dangerous trap. The opportunity is simple: get your money sooner, invest it, and then enjoy life now instead of waiting. The trap can be brutal. You could lock yourself into smaller checks for the rest of your life. In this video, I'm going to share with you how to decide if claiming your benefits early is the right move for your situation or a mistake that you'll regret forever. Hi, I'm Jason. I build retirement plans every week, and today we're going to cover the three critical questions that you want to ask to determine if you should collect your Social Security early and invest it. All right, so question number one that we want to ask is, what is our break even age? Well, before we determine what is your break even age, we need to define what is a break even age. All right. So, a break even age is kind of like an analysis of should I start my benefits early and how much will I collect versus what if I delay? And we all know the longer we wait, the more we get. So, should I delay and how does that work? So, a graph is probably the easiest way to look at this. Okay, so let's look at, let's say, two scenarios. One is you take your Social Security benefit at age 62, and those benefits will start to accumulate year after year and maybe look something like this. And then let's say, well, let's look at another age. Let's look at age 70. So the longer we wait, the more we get. Well, that starts to accumulate at a little bit faster rate because we get more benefits the longer we wait. Now, this area right here where they cross, that's what we're talking about in terms of the break even age. Okay, so again, what are we looking at here? These are the cumulative benefits if you start at age 62 or if you start at age 70. Now, when you start at age 70, you didn't collect for these years, but you start to collect more, and then it will catch up to your cumulative benefits at some age. The break even age is different for everyone. It could be age 78, 79, 80, 82, etc. All right. So we want to determine this break even age. And there's a simple analysis that we can do. If you feel like you will not make it to that break even age, let's just say it's age 80, then you may want to consider taking your benefits early because you paid all of that money into the Social Security Administration and you want to make sure that you can get it out. Or if you think, no, my longevity, I actually believe I'm going to live past the break even age. Well, then you may want to consider delaying taking Social Security. Now, I want to give one caveat to the break even age. The break even age calculator in this graph, something similar, was actually on the Social Security Administration's website, and they took it down. Now, why would they do that? Well, they did that because this can be a too simplistic of approach. Basically, you don't want to just look at your break even age, you want to look at many other things. And it actually brings up a third question. Well, what if we actually think we would live beyond the break even age, but we want to start taking it at 62 so that we can invest it? Well, then we want to discuss our second question, which revolves around our spouse. Speaking of a spouse, whenever we're talking about our spouses, we want to talk about when we're actually going to walk out on life. And so I want to encourage you to click the link below and download our Quick Start Estate Planning Guide. This has three simple steps on one page. The first step, get everything, all of your information in one place. Number two is it's going to help you make a list of the companies that you're going to need to call to make sure that you update information. And then step number three is it gives you an exact script, the exact questions that you should be asking to help get all of these things in order. So please click the link below, and we'd love to send you a free copy of that Quick Start Estate Planning Guide. So the second question that we want to be asking in terms of should we collect our Social Security benefit early and invest it is, what is the impact on our spouse? So let's go through an example. Let's say that we're dealing with Ron and Sally. Now, Ron's Social Security benefit, let's just say at age 62, is $2,000 a month. And then let's just say Sally's Social Security benefit is only going to be $1,200. Okay, so when we're asking the question, should we take our Social Security benefit early and invest it? We want to be looking at each of the spouses' benefits themselves. And as you can see, Ron has the higher benefit. Well, most of the time, that makes sense to defer taking Ron's benefit. And why do we want to do that? Well, it's the higher benefit. The longer we wait, the more we get. And then also, the surviving spouse, whoever survives the other spouse, they're going to get to keep the higher benefit. So it makes more sense to kind of preserve Ron's for the longevity in terms of income for both of them. And then that opens up the opportunity for Sally's benefit. It may make sense to go ahead and start collecting Sally's benefit early and investing it because we know we're letting this grow, right? Longer we wait, the more we get whenever we defer. So it may make sense in this situation to go ahead and start taking Sally's benefit and investing it. So as you can see, these questions start to build on each other. First, we want to figure out our break even age. Then we want to take our spouse into consideration. And the third thing that we want to look at is what are the tax triggers that we may encounter? Okay, so what do I mean when I talk about the tax triggers? Well, if you take your Social Security benefit early so that you can invest it, well, that benefit is seen as income, and that income is taxable. Now, it all depends on your other income, but first of all, we want to calculate your Social Security benefit. And when we talk about our Social Security benefit, this benefit is taxable, and that's actually some news to people. Some people think that Social Security is not taxable. It depends on your other income, all right? So 0% of it can be taxable up to 85%, all right? I want to be clear, this isn't tax rates. It means if you were to go ahead and take Sally's $1,200 a month, 0% of that could be taxable. You could have to pay taxes on 0% of $1,200, or you may have to pay taxes on up to 85%, but you'll never have to pay taxes on the full 1,200. All right. So whenever we take our Social Security benefit in order to invest it, we have to know that that's going to hit our tax return and we could pay some amount of taxes. And then once we determine Social Security, we have to know that can trigger other things as well. The next thing that we need to be aware of is our various tax brackets. And our tax brackets currently in 2025 are 10%, 12%, 22%, 24%, etc. So, if more of our Social Security is taxable because we're taking it early to investing it, we could jump ourselves, say, from the 12% tax bracket to the 22% tax bracket. So, that's another tax trigger that we want to be aware of. The third tax trigger that we want to be aware of is capital gains. So, what are capital gains? These are gains from investments that are not in an IRA or a tax deferred account. So, if you've got an individual investment account, a joint account, or maybe you had some investment property that you bought for 100,000, you sold for 150, well, that 50,000 can be subject to capital gains. And capital gains, you can pay 0% in capital gains, you can pay 15% in capital gains, or you can pay 20% in capital gains. And depending if you pay 0, 15, or 20%, it's dependent on the other tax triggers. How much of your Social Security was taxable and which tax bracket are you in? So as you can see, these build on one another and we need to understand all of them because it can really be a domino effect. And the last tax trigger is IRMA. Now, you may be asking yourself, Jason, what the heck is IRMA? Well, IRMA is an acronym that stands for Income Related Monthly Adjusted Amount. All right. And it has to do with Medicare, specifically your Medicare Part B premium. Now, everybody pays the premium for Medicare Part B, but if you trigger some of these taxes, you could end up paying more for your Medicare than, say, your neighbor. Now, you're not going to get any more benefits. You're not going to get any more access to doctors. You're just going to pay more for the same thing. So this is a very specific threshold that we want to stay under. And it's one of the things that I see retirees and other advisors oftentimes miss. So as you can see, whenever you're making the decision, should you take your Social Security early and invest it? You want to take into consider your break even analysis, the impact on your spouse, and then also what additional taxes can that trigger. And that's really, really important. But do want to highlight one other piece of information that I think could really be helpful to you. And that is if you take your Social Security early to invest it, it could shield you from market declines. And what do I mean by market risk shield? The market risk shield that I'm referring to is, let's just say you start taking your Social Security benefit early and the stock market tanks, and you were using income from those investments to help you pay for your monthly expenses. Well, then you could just start taking that Social Security that you were going to invest and you can use it for your income. So it can shield you from locking in losses. All right. So that's something very, very important. The other thing that it can allow you to do is take advantage of market declines. So, what do I mean by market decline opportunities? Well, if you're taking that Social Security benefit early and investing it, maybe you're not necessarily investing it in the stock market every month. Well, if there's times where the stock market is down, things are kind of on sale, if you will. It's a good buying opportunity. So, if you're already taking that Social Security benefit early each month, you've got that ability to take advantage of those lower prices. Well, I hope that this information helps you decide whether or not you should take your Social Security benefit early and invest it. And I want to invite you to click this video here where I go over the one cost you must cut in retirement.